All right, welcome back to the channel, everyone, and thank you for tuning in to another video. People, traders, they always have a hard time trying to determine when a trend in the market is actually ending, meaning where there is a reversal that is taking place. So if the market is moving to the upside and then all of a sudden it starts to plummet and move to the downside, traders have a hard time, especially new traders, have a hard time identifying, when they should start trading in the opposite direction. So if we're in a bullish market, uptrend to the upside, and then we're taking pretty much pullbacks to areas of demand in suit of taking a continuations going north, going up with long trades, at some point the market is going to reverse. We all know that. It can reverse at any given moment, depending on the time frame of the chart, but when we're looking at our higher time frame charts, typically the market will move in a certain direction for a period of time, and then it may reverse, and we have to be able to identify what is a telltale, pretty much a identifier, a sign that lets us know when the market has actually shifted. So we go from looking for trades from a bullish standpoint to looking for trades into a bearish standpoint. So, and you hear me talk about so often about higher highs and higher lows and lower highs. When we're looking at our higher time frame charts, we are depicting the movement of the market based on market structure, and the structure can change or shift again, like I said, at any point. Okay. Now I'm using my higher time frame 60 range chart, and I always talk about using the higher time frames when it comes to confluence, to aiding you in the direction in which you should trade. Okay, so this is a 60 range chart. Some of you guys may use 60-minute charts or 4-hour charts, whatever you use as a higher time frame chart to kind of give you a short-term to long-term biased direction of the market, and so you can kind of depict what type of trades to take. There's only two types: either we're going short or going long, right? So here we see the market is moving to the upside, making higher highs and higher lows. Okay. Now, when it makes this a pivotal point right here, this is somewhere back in the month of June. Just giving you some examples. It plateaus right here. It turns around, and you always hear me talk about breaker structures, right, guys? It makes a breaker structure right here below. This area below 31. Okay, so when it breaks below that area there, okay, that's at 44.31.5. We're looking at a chart of the E-mini S&P 500 futures, and you may be looking at the MES, but again, this is the ES futures. All right, it breaks lower, and basically what we have is we can start thinking that the market is going to start moving to the downside. But lots of times what traders fail to understand is that just because the market may come down and break an area or through an area of structure, say for instance, it may just be a turning point or a deep retracement, meaning the market is just testing some areas to stop traders out, and then it continues making moves to the upside. So basically we got a push to the downside, deep retracement, and then the market breaks structure back to the upside, taking out 42 3/4. Okay, so typically what traders would do is once we see a break in the opposite direction, say for instance, or the market starts to make lower lows and lower highs like it did right here, and maybe breaks through some area structure to the left hand side, we immediately start to think that the market has reversed. Right now, with me, I'm always thinking, okay, this could just be a deep retracement as well. But when price does break through an area structure, or the market does break through an area structure, I do, even myself, I start to look for opportunities to look for shorts, but I'm also mindful that this could be just a deep retracement. So what people would do, traders would do, is that when the market moves lower, they'll start to identify some key points of supply areas, supply being aggressive selling to the downside, in a continuation or through a breaker structure. So once price breaks an area structure to the downside, we start to look for pullbacks to a key area of supply to take the continuation move to the downside. Now, and that could be in this area right here. There was again, it's off the 60 range chart. There was a push to the downside, and then we got some selling activity right here. Price pulls back to this area right here. Now, I'm not taking my trade off the 60 range chart. We're just marking and identifying areas of supply off the higher time frame. So price pulls back to that area there. And what happens is lots of people will probably start scaling, or what you should do is start looking down to lower time frame charts to see if you can take a short entry, right? But you have to understand one thing, okay? If you were looking to take a trade at this area right here on a pullback right here, you got to be mindful that there's areas of support that rest right below, okay? And at those areas, price can reject at any moment and continue pushing to the upside. And I saw that. Say, for instance, if I'm looking at this right here and then price pulls back to, say, an area of supply right here, which I probably won't be looking to really have much interest in taking this trade right here, especially when we have such an aggressive move to the downside right here. I would be more so interested in taking a trade back up towards the tops, okay? With a move, always talk about where the move actually started at, okay? Now, I'm not saying that the market couldn't pull back, test this zone right here, and then reject, but there's got to be mindful of every area of supply, of support or resistance at rest. And so, for instance, a pullback to supply, we got to be mindful of support that rests right below. A pullback to demand, we got to be mindful of resistance that's resting right above, okay? So we have to understand areas where the market, blockade areas where the market could actually, find some area of support or resistance that it cannot simply push through, okay? So no, I'm not interested in this area. The market continues pushing to the upside. Again, it breaks structure here at 42.25, pulls back and starts running back to the upside, right? Okay, then it comes up here and makes a push up, pull back, and then a nice push higher, breaking structure again. Okay, so we're still bullish in my mindset. All right, but then the market turns. Okay, we get a aggressive push to the downside, and these are the type of activity situations in which I like to see, where the market tops out or bottoms out at an area, and then we get a quick push to the downside or upside with either aggressive buying or aggressive selling. In this case here, we got aggressive selling to the downside, broke through an area structure. So, I'm very interested in situations like this when it comes to reversals, when we get the market peaks out at an area and then we get a quick shift, in this case here, to the downside with aggressive selling. The market is just plummeting with, red candle. That's aggressive selling. So what I would be doing is taking my interest in looking for pullbacks to a key area of supply, which would be this area right here. Why supply? Because we got aggressive selling. We got to break a structure. So my mind now is thinking we've got a reversal in the market, okay? So I look for a pullback to a key area of supply on the higher time frame, and then I move down to my lower time frame and look for that key setup, that strategy that I use, that key setup that I like to take. That revolves around my strategy, looking for a pullback to a key area of supply, scaling down to a lower time frame charts to start to identify and look for those, a breaker structure on those charts there, with a pullback to the supply area, which would be once I see a breaker structure on a lower time frame. So it's just me using multiple time frames with confluence from the higher time frame or marking a zone, scaling down to a lower time frame, and looking for the similar type of setup. Okay, so in this case here, I mark a supply zone off my higher time frame, scale down once we tap into a major area of supply on the higher time frame to a lower time frame, look for a break structure to the downside off of a lower time frame to pull back to a new area of supply on a lower time frame. That just gives me double means of confirmation, confirmation of what we're doing on the higher time frame, aggressive selling, okay, I see that. But I need some extra confirmation or confluence. So I scale down to a lower time frame chart, and then I want to see the same type movement. I want to see a break of structure to the downside. That lets me know, okay, we're still moving to the downside, even on the lower time frame chart. Two charts are telling me that we're moving in the same direction, and there's still emphasis, loads of interest to continue pushing lower. I'm going to be interested in going short. So if you're interested in someone that's wanting to understand the strategy of how I actually trade in my own personal trading each and every day, then watch the videos, guys, especially the ones that are titled Supply and Demand, to get the gist of how I actually incorporate the charts, paired charts, or use multiple charts to give me more confirmation. The more confluence I always talk about that we have by using our charts together, the better off the trade is going to work, or the more probability you're going to have in taking a trade. But either way, what I'm trying to say here is that when trying to identify a key area or a reversal in the market, look to see first and foremost what was the overall direction of the market prior to. Of course, it can only move, well, it can move three ways, but primarily up or down, okay? Now, the market can range and move sideways, but we're not interested in, trading within that sideways action, that range. But in this case here, the market was moving to the upside. And then it made, it topped out here, okay? There must have been some area to the left-hand side that it, boom, bumped up against, all right? And then it turns and folds and we get a breaker structure. The breaker structure to the downside off a higher time frame chart where we have aggressive selling like this, okay, after the market makes a pivotal top end point, okay, and then forcefully moves to the downside right here, breaking an area of structure on the higher time frame. That is one of the key identifiers for me that the market is definitely reversing. Okay, it could be definitely a nice reversal in the market. Now, I'm not saying that instantaneously once the market makes a move like this that I'm going to start taking every little small pullback to go short. No, I always talk about I want to see or try to get in my trade at the origination point where that aggressive selling started at, because if they took off right here, then I want to wait for the pullback to take off back down to the downside with them. But also, again, I'm not just taking the trade the moment it gets right back to that supply zone, the higher time frame. I need more confirmation, so I'm going and moving down to a lower time frame chart to see if I'm getting rejection off the lower time frame or confirmation of rejection off the lower time frame just as well to get into a trade. I'm not taking it off my higher time frame. If you do this, you're going to have to weather a major storm, because we're talking on higher time frames. There could be variations in price, 10, 20 points or more, in which price can kind of push and pull. So you may take a lot of drawdown before the market moves in your direction, or you possibly get stopped out. I'm not here to tell anyone how to trade, but if you got deep pockets and that's your style of trading, is really more so swing trading, and you don't mind weathering that storm, then that's up to you, okay? I'm not here to tell anyone how to trade. I'm a scalper by the day, okay? Into the session of when the New York exchange opens or when the U.S. session opens, I'm trading, making scalp movements. So, but part of my strategy is using multiple charts in a sense to give me more confirmation. But that's what I want to talk about today, was really trying to identify using the higher time frame, which is going to be your first line of defense in a sense, to where you start to identify a shift in the market, a reversal, okay? Especially coming from where we see a turnaround point, in this case here, where we had aggressive selling to the upside and then the market just plummets to the downside or shoots hard to the downside real quick. And breaking through an area of structure, then you may want to really start to think, okay, this may be a pivotal point to where the market is trying to shift to move lower. It pulls back, and look what it does. It starts running lower, okay? Starts running lower, all right? So just pay attention to things like that. Look for those major areas of breaker structures on the higher time frame to give you some sense of direction of a reversal. So, and even if the market is moving to, let's say for instance, is moving to the downside, making lower lows and lower highs off the higher time frame, and then we get a move up to where it breaks structure to the upside, then we should start be looking for pullbacks to key areas of demand to take continuations going up, because the market again is more likely shifted, and now we got a reversal to the upside. Okay, so I just wanted to share that bit of information with you guys, especially those who have a hard time understanding or following, really reading market structure and trying to breaking it down, and have and are really clueless and lost when it comes to trading reversals, what to look for. That's what I look for. I like to see major breaker structures in the opposite direction off the higher time frame. But anyway, that's all I want to share with you guys today. Hopefully you found some value in it. If you did, please drop a like on the video. Your first time viewer, please take the time to go ahead and sub by clicking on the subscribe button down below, and make sure to click on the bell to turn on all your post notifications so you never miss one of the uploads here on the channel. You have nothing to lose, guys. I have lots of information and knowledge to share with you on this channel. Also, if you're someone that's interested in becoming part of our Discord community, yes, it is free. Find the link to the Discord down in the description portion of this video. Invite yourself in and come over to the Trading Floor channel on the Discord server, okay? That's where we as traders come together, and we share our trades pretty much. We share screenshots and images of our trades that we take on the daily, so that people and other traders who are community members can understand the trades that we're actually taking. And you can ask questions if you don't quite understand the trade that someone's taking. That trader will be, more than willing to, I should say, to discuss that trade with you. You know, let you know what they saw. You know, not here to say that everybody trades exactly like me. That's the beauty about trading, is whatever works for you and you have a beautiful strategy, continue to use it as long as you found a way to be profitable within the market. That's what it's all about. All right, guys, I'll see everyone in the next video. I'm getting over to my trading session now. It is currently 9:45 my time, Eastern time, and I want to get in and see what the market is doing and see if I can get into a couple of entries. So if you're someone that's watching this video, come over and join us today. You know, click on that link down below in the description and join the Discord. But also become part of this community, starting off by clicking on the subscribe button down below. Take care. See everyone later.